Hi, everybody. This is Jessica Stone from Stansberry Research, and we're doing a Stansberry Research panel today with Brian Tycangco from Manila, Philippines, and James Early from here in the Washington area, because they both have expertise in Asia, and we want to look at what's going on in Hong Kong. Obviously, we've just had reports of tear gas and multiple arrests because the protests are escalating there due to the national security law that was passed in China. What are you seeing at this point, Brian, in terms of the impact on the markets?
Okay, the initial impact on the markets in Hong Kong were pretty bad on the first day of the protest. That was last week. But then the markets really bounced back a lot. And that was because I think the authorities or the Hong Kong government sort of like quelled the fears a little bit, particularly among investors, that Hong Kong's financial status would not be impeded because of this new law.
But James, I think we have probability that the status of Hong Kong will change, at least in respect to how it trades with the United States.
We're expecting a very strong response. That's been telegraphed multiple times, so I think we will see it. To me, this issue is not just about Hong Kong, it's about China, and that's the elephant in the room here. You know, China is using this virus as an opportunity to reach out in multiple ways to grow its power, and Hong Kong is one of them. And this is going to be perceived, Jessica, by most of the rest of the world, regardless of what China thinks, as China violating its fundamental rule that it agreed to in 1997 with the give back. So I'm a little more bearish than Brian is. I don't want to be more bearish. I think we won't see a total collapse, though, because this has been this sort of neutralization of Hong Kong has been in the works for a while. We've seen this happen on multiple fronts. Beijing has been trying to grow the area around Hong Kong in anticipation of sort of minimizing Hong Kong's influence. So this is a big step. It's not quite a nail in a coffin. It's more like a staple in a coffin.
Brian, you've talked already about how China has telegraphed this and how people in Hong Kong have expected that they would begin to lose some of these special privileges. I don't know that they expect to lose special trading status with the United States, but what is your long-term picture of the economic prowess of Hong Kong? I mean, it's really the jewel of Asia. Do you expect that to continue?
Hong Kong has historically been kind of like the window into China, like the way China accesses the world for a long time. And more recently, it's been more of a window for the whole world to access China. But then what we've been seeing from China has been the positive moves of actually opening up its financial sector, things like allowing foreign companies to own 100% in financial services, opening up the QFII, or the Qualified Foreign Investment Scheme, and the Stock Connect scheme, which allows easier flow of funds between outside and into China's stock markets. So we've actually seen Hong Kong's role and importance in China diminish over the past decade. However, that doesn't mean that Hong Kong will no longer remain a financial center. Actually, MSCI just came out with a statement saying that it still sees Hong Kong as a major global financial center over the next coming decades. And that's after the threats from the US to strip Hong Kong of its trading status.
James, what about your thoughts on whether or not Hong Kong sort of maintains its ability to be at the center of business, particularly in Asia? I mean, with some of the relationship changing between the US and China that's continuing to happen and really escalate, are you confident that Western companies in particular will want to locate their Asian operations there?
Well, Brian's got a great point. Since 2018, Hong Kong has been, I believe, the world leader in IPOs for the last 2 years, and they continue to. But we're seeing a homogenization of that demand. It's not these globally diversified companies. It's Chinese companies, and often they're doing this because they fear what would happen with the U.S. listing. So the Western perspective would be, look, all these companies that are international, all these companies that care about human rights, all these companies that are just concerned about the overall ethics of what China is doing, they're going to leave Hong Kong. And I think that's true. But I think the PRC would look at this and say, yes, that's the point.
Ryan, is that a bit short-sighted, though? I mean, China obviously has had a lot of benefit from having multinational corporations, not just in Hong Kong, but on the mainland as well.
Hong Kong accounts for 20 to 25 billion of U.S. trade surplus. So doing anything to strip Hong Kong of its sort of like special trade status actually does more harm to multinational companies and U.S. interests than it does to hurt China. A lot of companies, use Hong Kong as their headquarters or as their base to gain access to China. Again, China has also been making moves to diminish Hong Kong's role by actually opening up its financial industry and the financial sector. So I think it actually blunts the impact of anything that the U.S. is trying to do with regards to Hong Kong.
James, I wonder, there's all this conversation about decoupling. Does this move by China, does this speed that process up?
For sure. And honestly, Jessica, I think that dwarfs the particulars we're talking about with Hong Kong as well, because obviously there is an argument that there's a lot of economic activity that'll stay in Hong Kong. But let's step back and look at the big picture here. This is going to be perceived by the U.S. It is being perceived by the U.S. as a belligerent move. Probably by Europe too, although they'll be a lot more quiet about it. I think this is going to accelerate decoupling from China on the part of the U.S., from Europe, from wherever else. And that's going to be the real economic story at the end of the day, or at least by the end of this year.
Well, always lots to talk about. I appreciate you both joining me here. And if you who are watching would like to see much more content like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for watching.